So I guess we've been investing in India for the last 12 years. I think over the time, we initially started with the idea that India is going to be just like China. There's going to be this amazing growth and fantastic opportunity to own a lot of technology-driven companies that are going to change the landscape of how consumers consume. And in effect, India is not like China. India is not like China. India is not like the US. India is very much its own unique market. And I think what we've learned over the years is that the manner in which brands and businesses are going to be built in India are going to look very different. So on one side, we look at it and we say there's a $600 billion retail market that's going to grow to $1 trillion, and the hope is that 10% of that will be done in over connected devices, whether it's PC or mobile more likely. And so therefore, this $100 billion digital economy or digital e-commerce market is what's exciting. And I think that's just one part of the equation. And sure, there will be one winner for that. But India, unlike China, is a very open market. So your Amazons, your Ubers, your Alibabas all have a fair shot at the market. So now we can't assess the value of India or the potential of India just on that area. It tends to be the one that gets the most attention because it's the biggest sort of singular prize. But there are so many other fragmented areas that are yet left to be organized. And I think that's where the real opportunity exists. The whole notion that for decades and actually for centuries, India has been a very fragmented country. And so the result of that has been that retail is only 6% organized in the country. What that has meant is that nobody has been able to actually build scale in distribution. So if I don't have scale in making a product and distributing a product, then I'm never going to have the cash flow to invest in really improving the product. So as a result, what happens is I never actually create really high quality products. So as a market, on one hand, we've suffered from a lack of scale, not enabling high quality products. On the other side, because of a mindset of, let's say, licensed, and it was called the license Raj. In order to have access to selling something, you needed a license. So you had monopolies. So you have monopolies on one side that are basically not investing in improving quality of product because they don't have to. The other side, you have fragmentation that hasn't enabled scale. Now you have the internet that's actually bringing you scale distribution. And so now for the first time, you have the chance to actually build high quality branded products. So what we're seeing as a venture investor whose primary objective is to find high earnings growth companies is that we now have the chance to leverage technology into businesses where you not only own distribution, but you also own product. And so suddenly I can get the product margin and the distribution margin. A great example of this is a non-tech company that in the last 5 years has gone from 100 million in revenue to $1 billion in revenue, a business called Patanjali, which is basically selling Ayurvedic consumer products. These guys have killed it just by having a yoga instructor effectively as their spokesperson. And so that also brings into fact the idea that the brands that are going to be built going forward are going to be based on authentic, direct communication, not just celebrity, big advertising. So suddenly we're looking at a consumer base in India that is very Gen Z, millennial in nature, wants to be spoken to in a certain way, believes in core underlying principles of the products that they're going to buy, and doesn't want to pay a ton of money for it. So if you can marry all these ideas together and think about the market a bit differently than how you would think about the US or China, I think you can find extremely unique, exciting opportunities to build businesses that have a long-term sustained competitive advantage.